I think consolidating, I think it's a harder decision here in the next 8 weeks. My gut is it grinds higher, but I'm not positive. I think over a 12-month period, we will be much higher than here. And I worry, the biggest worrying sign would be if the 30-year rate starts falling at a increasing rate. Right now, it's still just all kind of grinding around and the curve is steepening. But the twos versus 30s, let's say it's roughly 125 basis points. If that thing is 175 in 6 weeks, that's a problem.
Crypto isn't dead. It's just quiet. After the chaos of recent market cycles, Bitcoin is now in a rare middle zone, not ripping higher, not collapsing, just breathing. This is the kind of phase that tests patience. Traders look at the charts and ask, is this it? Are we going up or down? But the real answer may not come from candlesticks. It's in the macro data, where bonds, rates, and curves quietly shift the ground beneath everyone's feet. Popular American investor, Michael Novogratz, calls it a healing phase, and that's probably the best way to put it. There's a sense that the worst may be behind, but clarity about what's next isn't here yet. He sees a slow grind higher over the next year, not a rocket, but also not a crash. Still, he's watching one thing closely: the bond market. If long-term yields start falling fast, that's not bullish. That's a warning sign. It means the economy might be cracking underneath. What makes this moment tricky is that it doesn't come with alarms or headlines. It's a game of inches. The crypto market is moving again, just not loudly. And for the smart money, this is often where the best setups begin. Let's take you back to Michael Novogratz's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the rest of the video.
And I think there was a tremendous amount of fear in the market around MicroStrategy. People don't understand exactly the Saylor's strategy, and they started fudding this idea that at one point he's going to be a forced seller of Bitcoin to pay off his preferreds and his perpetuals. And I think the strategy team got together and said, let's put enough cash on the sideline for the next 2 years that we can make every payment that we have in a cash reserve. Yeah, 1.4 billion,
Yep.
which is his, payments coming due, on coupons. And he can then just sit. And there was a spectacular volume day. So what you call a key day reversal in trading is monster volume. The market starts down and ends up. And so I think in the short run, the MicroStrategy fear went away, and that allowed the market to breathe like, oh my God, it's not the end of the world. It doesn't mean crypto's out of the woods. When you look at a chart, Bitcoin really has to get back above 100 and stay above 100 for, a week or two, for it to feel safe again. Right? Big money is made in trend, and you can define trend by the 20-day, the 50-day, the 100-day moving average. When you're below all three, it's kind of super trend. When you're above all three, it's super trend bullish. And, we're below all three in crypto right now. And we're below this line at 100 where lots of the volume happened above. And so that's going to act as a ceiling for a while. It doesn't mean we won't get through it. Bitcoin is a funny instrument, and there's a real narrative for it. And you're also seeing real money people start to buy. But when I say real money, the wealth channels of America, right? RIAs, registered investment advisors, manage about $45 trillion, mostly for older people, of wealth. It's the single largest block of wealth. And you're seeing Bank of America, JP Morgan, Vanguard, all these big institutions saying, hey, my salespeople can now sell Bitcoin, which is very different than you were allowed to buy Bitcoin. We can now sell it. And you're seeing buying there. And if Bitcoin ends next year at 140, it's going to mostly be because you've seen this U.S. wealth. Like a 3% allocation is $1.5 trillion. It's a lot of wealth. And so if it starts moving, you could see that change the trajectory. But in the short run, we still have this overhang of the treasury companies and the fact that people thought it should be a lot higher this year, and it's not. If you know Michael, you know his fundamental belief Bitcoin's going higher. Listen, if something would happen and Bitcoin doesn't go higher and it goes down to 30,000 or 20,000, yeah, MicroStrategy is not going to be a very good stock to own. Part of the bet that shareholders in MicroStrategy have made is that Bitcoin goes higher. You're now basically trading at parity to the Bitcoin that it has, you know, when you adjust for debt and everything else. And so now it feels more like an ETF. Listen, there were tons of people, me included originally, when he had this strategy that was trading at a big premium, said it can't last and it's got to go to become just equivalent to an ETF unless he can do something really creative. His creativity, which was real creativity, was he found a way for people to believe in him, sell Bitcoin at a premium, use that to buy more Bitcoin. For the existing shareholders, they benefited. For the new shareholders, they needed new people to come in. And so you got a lot of the last group of his shareholders are underwater. And so, you know, most of them are probably going to hold and ride the Bitcoin train. Some will sell for taxes and some will sell just because they're like, enough of this. I think he will have a hard time reigniting that flywheel. But I think MicroStrategy can trade as a closed-end fund, you know, for a long, long time without having to sell any Bitcoin. It might trade at a 10% discount or even a small premium. And so all these treasury companies are now in the same position. MicroStrategy at least has a ton of volume every day. Like it'll trade $2 billion of volume today. Like to put that in perspective, Galaxy, which is a $10 billion, $9 billion company, will trade 250 million today. So they're trading at more volume than the ETFs. Most of the other DATs, other than Tom Lee's BNMR, trade with almost no volume. And so you've got this collection of kind of closed-end funds, and closed-end funds normally trade at a 10 to 20% discount, and it just becomes less exciting of a story. Why it's important for crypto is because for 3 months, that was the vehicle that was bringing new capital into our space. It doesn't have to be a disaster for the space. It's just going to be dead money. For crypto to have its next leg up, you need new sources of capital. And that's either going to be wealth or it's going to be some retail frenzy that shows up again out of Asia or out of somewhere. It's easy to sell things that are going higher, and it's hard to sell things that are going lower. And so you've got to base and get a little bit of positive momentum. I use that level as 100. If you get about 100, 105, there's going to be the FOMO machine. Oh my God, I should have bought it at 85. I should have bought it at 90. I should have bought it at 92. And then you're going to really see the acceleration. But it might take us, you know, a few months to get through that. We might go lower first. We might go, you know, I'd like to think 80 was the short-term low. You know, I would say volumes are down 30 to 35%. And a lot of this still comes, and we talked a little bit this last week, comes from that Black Friday, as the crypto guys were calling it, when you had these wild drops and a lot of punters. And remember, crypto investors like a lot of leverage, and a lot of them got wiped out. And so you wiped out a lot of market makers and a lot of participants. And I always say Humpty Dumpty cracks. It takes more than a week to put them back together again.
No question.
He always gets put back together again because paychecks come in, dad gives you money, inheritances, and people have more money to start putting in the markets. But it just takes time. And we're at a lull right now. If you want to look at the most interesting chart of the day, and not everyone has this ability to chart, but if you look at the 30-year interest rate or the future on the 30-year interest rate, so on Bloomberg, it would be USHC, or GT30, or just the 30-year bond on Yahoo. The pattern looks like what you call a head and shoulder. And when those things break, it's a big leg down. Almost like when crypto went under 100, it goes pretty fast to the next level down. If bonds go a little bit higher in yield or lower in price, you could see kind of a cascading effect. And we've seen that in Japan with their bond market, and that's usually a canary in the coal mine, so to speak, right? So you're having confidence break down that central banks plus Ministry of Finances are going to be able to keep confidence in the long end of the yield curve. That's not good for risk markets. And so if the bonds really start breaking down, we got to be careful. Again, why picking a Fed governor who has the respect of the market, who will fight for the Fed independence, is all because of the bond market. If you pick, a guy who just does whatever the president wants, you could see the bond market break down, and that's a real problem for people. It might not be Hasid, because if this bond market breaks in the next 10 days, and that's all you hear about, Donald Trump, as you know much better than I know. I just watch him. He's a man that could change his mind in an instant. If he's got a bond market that's crapping itself, you're going to have Scott Bessent in his ear saying, yeah, you might want to go with Kevin Warsh. You might want to go with Rick Reeder, someone who Wall Street trusts. Because all you got is the bond market.
A wave of fear gripped the market over a potential Bitcoin dump, but that narrative flipped fast when a $1.4 billion reserve was revealed. It wasn't just damage control, it was strategy. Now, institutions are waking up. RIAs, once cautious, are gearing up to sell Bitcoin, not just allow it. This is how the next wave begins. Real momentum won't come from hype, but from structured capital flow. And once Wall Street smells green, they don't just invest, they push the narrative forward. When power becomes performance, democracy starts to crack. Central bank independence is under quiet threat, and the eerie cabinet praise sessions only sharpen that fear. At the same time, prediction markets are exploding in size, skirting regulation, while legacy platforms drown in red tape. According to Novogratz, it's a collision of speculation, influence, and moral blind spots. Betting on elections, disasters, or manipulated outcomes isn't just risky. It blurs the line between free markets and rigged games. The stakes aren't just financial, they're societal.
I think Trump really wants to have control. I think it's dangerous, right? The last president that took control of his own central bank in a big country was President Erdogan of Turkey, and the next year they had 86% inflation. Like, it normally doesn't end well. Like, we have independent central banks for a reason. What's scary, Anthony, is if you look at any of the last 10 cabinet meetings, but there was one, I think, 2 days ago, 2.5-hour cabinet meeting, and they televised them. And each cabinet secretary goes around and praises, the commander-in-chief.
You gave that leadership, and we're going to do it. Thanks to your leadership. That's why everyone with your leadership.
Congressional Republicans under the president's leadership. Under your leadership.
Thanks to your leadership.
Under your leadership, Mr. President.
Under your leadership.
Under your leadership.
All because of your vision leadership.
Just appreciate your leadership, Mr. President, and empowering us to be able to conduct this service. Merry Christmas.
Donald Trump is the most visionary leader I've ever seen. And this performative deifying of the president, which just plays right into Trump's smile, is dangerous. It feels like North Korea. And so Hassid's in that circle right now. And I don't know. He could surprise us all if he's got the gumption to say, no, Mr. President. You just appointed me. I'm doing my job the way I'm supposed to do it. So we had a shtick going, and I look back, I wish I had invested. I didn't. He had a long haul. While he was able to raise capital and people really believed in him, it was not an easy path for him, including, having his office raided by the FBI. What has been so unique in the last 6 months, and where both of these things are now raising money, both Kalshi and Polymarket raising money over $10 billion, out of nowhere, was the regulatory mind shift that came in with the Trump administration. Said, oh no, these things aren't illegal. It's a new way of looking at things, and we'll let you be regulated, broadly unregulated, right? A CFTC product. And people are like, what? And if you're a casino that has spent hundreds of millions of dollars on compliance and regulation and getting your people approved, or if you're a sports betting organization, if it's DraftKings or Fanatics or any of those giant sports betting platforms, you're saying, this is unfair. Like, we have this huge overhead and huge burden of compliance, and these prediction markets don't. And the government's kind of saying, tough luck, you know? And so these guys have wings in their sails. I think you're going to see it is a very disruptive business in sports betting, in markets. No, listen, you will see lobbying fight back. DeFi, decentralized finance, permissionless systems is the crypto equivalent to the prediction market in the sense that it will give those platforms like Hyperliquid or Uniswap huge advantages over traditional exchanges because of the same compliance stuff. And you saw Ken Griffin going down to DC today saying, no, that's not fair, right? So the incumbents are going to try to protect their space. And the biggest risk to Kalshi and Polymarket isn't them being able to get customers and create great product. It's the lobbyists that are going to try to change the rules on them and say this is not fair because they've got an advantage. There is this balance between the Democratic side likes to protect the consumer, and sometimes they way overdo it. The Republican side has a buyer beware. Listen, if it's disclosed, you're a big boy, go do it. And I come out probably not right in the middle, probably a little right of the middle on this stuff. I think humans are smart. I think they learn quickly. That said, I think we need far better disclosures, and we need fair set of rules. That Google engineer, if what was written about is true, should get prosecuted and thrown in and fined and thrown in the clink, or at least have some severe penalty. And so you could have markets that are free to operate in, right? You don't have to be a certain wealth to participate, right? Like, we could have open access to people, but we need a much, much better disclosure regimen. And there's got to be a process, and with AI, it should be doable, where markets do get monitored for irregularities. Now you've got gambling being normalized as part of life, as part of consumption, as part of joy. And again, I don't think it's a good thing per se, but it's a thing. And you see it in meme coin investing. You see it in same day options. I got a son-in-law who's an awesome meme coin trader. I've got a cook, a chef that does same day options, right? Like, everyone around my space, my son loves sports betting, and they got every male kid between 22 and 30 or 16 and 30 understands what a parlay is, right? And so this is just taking that, giving it another form, and making some kind of, you can do politics, right? It was illegal to bet on elections in America. That's why Shane got raided. Well, should it be illegal, or yes or no? And I think the people say, let me bet on anything I want to bet. My money, I got to do with what I want. And, the morality of a country has to say, yeah, we don't think it's good, or we think it's good if you're 25 years old or over, or, that's what countries get to come decide what their morality is. And right now, the morality of most countries are, let them gamble.
Bitcoin might be flirting with $90,000, but this rally isn't running on euphoria. It's running on expectations. Traders have already priced in this week's expected Fed rate cut, and the market is waiting for something more decisive. With resistance just above at $91,000 and sideways movement dominating the chart, it's clear the real fireworks may not begin until 2026. The reason? The Fed itself. All eyes are on who takes the reins after Powell. Kevin Hassett is rumored to be Trump's pick, a name that's drawn attention for one major reason: his strong alignment with Trump's aggressive pro-cut stance. If Hassett does become the next Fed chair, it won't just mark a shift in policy. It would signal a break from decades of central bank independence for Bitcoin and other risk-on assets that could be rocket fuel or a wrecking ball. Michael Novogratz has warned that playing politics with the Fed rarely ends well. His comparison to Erdogan's central bank takeover and the resulting Turkish inflation crisis wasn't just for drama. It was a reminder that weakening the Fed's independence could destabilize investor confidence. And while prediction markets like Polymarket might already be pricing in cuts and appointments, the real game begins when institutional players start responding to long-term structural shifts. In that world, Bitcoin isn't just an asset, it becomes a macro signal. 2026 might not just be bullish, it could be transformative, but only if the narrative stays intact and the FOMO machine kicks back in. As we wrap up, do you think Bitcoin is in a healing phase or just delaying a bigger move? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.